Ethereum just surpassed Bitcoin, and while most missed it, insiders didn't. Billions moved, narratives collapsed. And if you act now, here's exactly how you can profit. Ethereum didn't surpass Bitcoin in price, but it did surpass it in something far more critical: transaction volume, user activity, and real-world utility. In July 2024, Ethereum processed over 4 times as many transactions as Bitcoin. Not speculative trades, but actual usage. DeFi lending, NFT mints, stablecoin transfers, gaming economies, and Layer 2 rollups. Meanwhile, Bitcoin remained static, a vault in cyberspace, untouched, unutilized. This wasn't sudden. It's been brewing since 2021. The merge cut Ethereum's energy use by 99%. Then came the rise of rollups, like Arbitrum and Base, which exploded Ethereum's capacity. NFTs and DeFi turned Ethereum into the beating heart of digital ownership. Bitcoin? Still waiting on a killer app. According to a consensus report, Ethereum now supports 72% of all Web3 developer activity. And here's what they're not telling you. BlackRock's Ethereum exposure tripled over the past year. The whales are already swimming upstream, and it was not because of hype, but because Ethereum works. The flip already happened, just not in the way most expected. But what if Bitcoin's throne was always built on borrowed belief in time? Bitcoin still wears the crown, even though it's mostly symbolic now. The deeper you look, the clearer it gets. Ethereum has eclipsed it where it matters. Ethereum generates over $10 million in daily network fees, not from speculation, but from real-world activity. Lending, borrowing, gaming, stablecoins, DAOs, all flowing through Ethereum's arteries. Meanwhile, Bitcoin's single function, store of value, is being disrupted. Stablecoins now do it better. Dollar-pegged, yield-generating, fast-moving, and more usable. Add tokenized treasuries, and Bitcoin's slow, expensive, deflationary model starts looking more like gold 2.0, but without the jewelry demand. Post-merge, Ethereum became 99.9% greener, instantly flipping the ESG narrative. Bitcoin miners, on the other hand, remain under fire for energy consumption, especially in a post-ETF, institution-friendly world. A leaked Fidelity note said it best: Ethereum offers scalable utility, Bitcoin offers legacy sentiment, and in today's market, sentiment fades, but utility scales. So if you're still betting on a Bitcoin bounce, ask yourself, what's left to bounce back to? While retail debates ideology, the smart money has already made their move. You missed the warning signs. Don't miss the blueprint. On-chain data reveals a clear trend. Whales are rotating out of BTC and into ETH, not hype-driven meme tokens, but long Ethereum positions, staked and compounding. Between January and June 2025, wallets holding over 10,000 Ethereum grew by 18%. The same tier for Bitcoin? Down nearly 9%, but that's just surface level. Venture capital is flooding into Ethereum's Layer 2s, Optimism, Base, Arbitrum, not only funding infrastructure, but acquiring teams, tech, and tokens before they're publicly listed. BlackRock and ARK, quietly increasing exposure to ETH-aligned assets via trusts and indirect holdings. Meanwhile, Grayscale rebalanced its crypto fund in Q2, cutting Bitcoin exposure and doubling its Ethereum allocation. Behind the headlines, a playbook is being executed. Buy utility, buy infrastructure, buy Ethereum. The market already voted. The insiders already placed their bets. And if you're still waiting for confirmation, you're not early. You're exit liquidity. The question now isn't if Ethereum wins, it's how you benefit. This isn't financial advice, but it is what the smartest players are already doing. Step 1. Buy and stake. Ethereum isn't just an asset, it's a yield machine. Through platforms like Lido and Rocket Pool, investors earn passive income by helping secure the network. And as Ethereum adoption grows, so does that yield. Step 2. Position early in Ethereum's ecosystem. Layer 2 tokens, like Optimism, OP, and Arbitrum, ARB, are still undervalued compared to the growth they're facilitating. Base, Coinbase's L2, doesn't even have a token yet, but insiders are already circling. Step 3. Track Ethereum dominance, not just in price, but in user activity, gas fees, developer commits, and active wallets. The ecosystem tells the story before the market reacts. In step 4, diversify within the ecosystem using DeFi index protocols like Index Co-op's DPI, gaining exposure across Ethereum's top projects without chasing individual plays. Because in this new cycle, Ethereum isn't just a coin, it's an entire economy. But every revolution has resistance, and Ethereum's momentum isn't immune to shock. Hit subscribe as we break down the strategies that Wall Street keeps hidden before they impact your financial future. Let's get one thing straight. Ethereum isn't bulletproof, and understanding its vulnerabilities is how the winners stay winning. First, regulation. The SEC and CFTC are still locked in a turf war over crypto classifications. Ethereum sits in the gray zone, too decentralized for some, too programmable for others. A sudden reclassification could freeze liquidity or force exchanges to delist ETH-linked tokens overnight. Second, centralization fears. Over 30% of all staked ETH runs through Lido. Critics argue this undermines Ethereum's decentralized ethos, turning validator power into cartel-like control. It's a debate that could ignite governance battles ahead. Third, competition. Solana and Avalanche are cheaper, faster, and gaining mindshare. And ironically, Bitcoin Layer 2s like Stacks and Lightning are starting to make BTC programmable. Finally, scaling pains. Despite Layer 2s, Ethereum still suffers from gas fee spikes during high demand. For users, friction equals frustration. The lesson? Ethereum may have flipped the narrative, but it still has hurdles to survive. And those hurdles are growing more political, more technical, and more existential. Because Ethereum's real power isn't competition, it's quiet, unstoppable financial reconstruction. This was never just about beating Bitcoin, but always more about redefining the entire financial system. Ethereum is becoming the infrastructure layer of a new economy, one where code replaces paperwork, wallets replace banks, and transactions settle globally in seconds. Major institutions are no longer observing, they're building. BlackRock, Franklin Templeton, and JP Morgan are tokenizing real-world assets like bonds and treasuries directly onto Ethereum and its Layer 2s. This isn't theory, it's already happening, with billions in tokenized securities live on-chain. Stablecoins? Nearly every major one, USDC, USDT, DAI, uses Ethereum as its primary network. DeFi protocols run on Ethereum rails. Even central banks are exploring CBDCs built on Ethereum-compatible architecture. And with ETFs and institutional custodians entering the space, Ethereum is quietly being adopted as the default settlement layer of Web3. This is way more than a coin. Think of it like the operating system of the next financial age, and it's already running, even if most people haven't noticed. Because sometimes the biggest shifts don't announce themselves, they just keep unfolding. Ethereum didn't win a war, it opened a new one. Bitcoin's narrative might survive in the minds of diehards, but in the market, narratives don't pay, utility does. And Ethereum isn't just evolving, it's accelerating. New upgrades, new capital, new use cases. Every 6 months, the ecosystem looks different and stronger. Meanwhile, the loudest Bitcoin voices grow more ideological, more rigid, and more detached from how real money moves. The winners here? They're not the maxis, they're the quiet ones. Tracking wallets, testing apps, diversifying into the ecosystem before the headlines catch up. Because if Ethereum flipped Bitcoin in silence, what else is quietly being built beneath the noise? Another flip, another revolution, a new chain rising beneath our feet? This isn't about tribalism, it's about timing. And for those watching closely, Ethereum's flip wasn't the finale, it was Act 1. If Wall Street controls the rails, can Bitcoin still call itself free? Let us know your thoughts.